It's live. The following Crypto Academy video is designed to help you understand how to identify an entry point for your trades and investments. Remember, we're all learning together, and trading can contain substantial risk. Should you accept the full responsibility of your investments and agree to the terms of this disclaimer, please continue forward with the training. This lesson will focus on answering the following questions. Before we continue, feel free to pause the video, minimize any distractions, and prepare yourself to learn how to enter the cryptocurrency markets. Whether you're just getting started with trading or you have experience related to other markets, what we're going to do is brainstorm a few key things that I really do believe are going to help you with your entries, regardless of what you trade. It's very important to have a goal, something that you should consider with the markets you're focusing on. Is how much does price move on a typical day? And will you be trading those markets, investing in the asset to physically hold on to it, or doing some of both? Because with cryptocurrency, we do have the flexibility to invest and own the asset, but we also have the freedom to utilize leverage and trade with margin positions so that we can capitalize when the market is going up or down. Before you can even begin to think about taking a position and entering the market, there are a few things that are very beneficial for you to do. Wherever you're at right now in your trading journey, I'm more than confident that you have heard of certain concepts, you've been introduced to specific strategies and ideas. And so, what we're going to do right now is pause the video and take up to 10 minutes to write down all of the concepts that you've heard about, that you may think are useful in a trading strategy, and perhaps the specific indicators and techniques, your overall approach within your trading strategy. After you've taken the time to write down all of these key concepts, we're going to continue talking about why this is important for us to understand when we're looking to enter the markets. I would imagine that because you are continuing the video, you've created a list of key concepts and ideas and theories and indicators and all of these different things that you know a little bit about, maybe you know a lot about. And to give you some examples, this is not a complete list. And when we think about all of the different strategies and systems and indicators and overlays and theories that are out there influencing traders' decisions when it comes to making a decision to enter the markets, it's very important that you are able to identify which ideas you are currently using, which ideas you have put some time into studying and have a certain level of understanding about. And also, it is essential that you rank out in order out of all of the ideas that you've written down, which ones you feel are valuable to you right now, because we're going to be applying these concepts looking for confluence when it comes to entering the market. When it comes time for us to confirm our trade and enter the market, there are 3 steps that I always follow in order to confidently enter my position. The first thing that I've done is I create a simple checklist that I can rinse, repeat, and duplicate with every single trade I take so that I know, based upon the theories and ideas that I find valuable, if a trade setup is occurring and I can see that there's a harmonic pattern that is forming in confluence with the trend direction, and we're also looking at taking our trade at a Fibonacci level that lines up with some sort of major whole number, implementing some quarters theory, I can check off all of the boxes and score my trade because we want to have as many probabilities in our favor as possible. That ties in directly with the second step, which is using limit orders at these areas of confluence. It's going to be more effective for your trades if you allow the market to come to you and you enter at a point where you feel confident and you're able to plan out your reward to risk parameters in advance. You could give yourself a specific percentage of your account that you're looking to risk. You could risk a certain number of pips. Let's say that you had a $1,000 account. You could take a trade and give yourself a 100 pip stop loss using a micro lot, and you could be completely wrong with your entry. It could go and it could stop you out, and you would only lose $10 for that trade. You would still be able to participate in the market. Whereas if you over leveraged your account and you traded with a standard lot, that same 100 pip movement would blow up your entire account. So keep in mind, our objective is to choose quality trades rather than trading all of the time. Let's go ahead and transition into the chart so that we can look at an example of confluence defining our specific rules for entry and how you could plan out your reward to risk in advance to really solidify this idea of getting confirmation on when it's time to enter the market. Here on the daily time frame, we're going to be able to get an idea of what direction the market is trading in. And it's important for us to understand what direction the market is heading in so that we can now start to look at the probabilities of us getting into a profitable position. We can start to add things like our Fibonacci. We could also go ahead and add on indicators like moving averages. We can find ourselves looking at the volume. We could also see where we're at with respect to the lunar cycles. Whatever theories you feel are best for you. When it comes to entering the market, as long as you have that checklist, you're going to find yourself feeling more confident, being able to go to sleep with your trades open because you have planned out your reward to risk, and you were able to quantify why you took that position. When we come down into the smaller time frames, something like the hourly, the 4 hour, even the 15-minute, we're going to see certain candlestick patterns and reactions at areas of significance. One trade idea right here. If we were looking to take a position at the 600 price level due to the candlestick pattern giving us some divergence with our moving averages being crossed, the trend being in a fairly solid downtrend. All of this confluence was also occurring at the 50% Fibonacci level, and there's been some pretty clear respect of this area in the past. So we're trading at a major whole number, one that is very significant. And TradingView does offer you tools such as the long and short position box. And all that you have to do to be able to see what your reward to risk would be is put in your entry price where you would be putting the limit order. You would then go put in your stop loss, put in your target, and it's going to show you what the risk to reward ratio is. This is really going to increase your confidence if you trade at areas of confluence. You have those boxes that you can check anywhere from 3, 4, 5, even 10 confirmations. But remember, this is about identifying quality trades. So you want to be able to take the necessary time and be patient to let the market set up in a way where you're going to feel good about entering that trade rather than trying to force it and rush into it. Patience and trading effectively in the markets, getting those entries with precision and minimal drawdown requires discipline. And because there are so many different markets for us to trade, whether it be cryptocurrency or the foreign exchange, if you take the same approach and practice, even if the market is not set up in the moment that you look at it, you can still find yourself using those limit positions and let the market take you into it. When we think about what could happen and what could be the next move on any particular asset, just remember this. If the market is not presenting a clear opportunity to you, and if you are not able to confidently check off those boxes of what you need to see in order to enter effectively, just sit on your hands and be patient because there will always be more opportunities, whether it's in cryptocurrency or Forex. And if you find yourself investing in cryptocurrency, you can take the same approach because exchanges do allow you to use limit orders. So it really just comes down to deciding on a price that you feel good about, using whatever confirmations you find valuable, and understanding that this is an ongoing learning lesson. And with practice, your entries are going to get better and better. In summary, you can effectively prepare to take a position in the market prior to the movement happening with patience and practice in order to achieve that precision and minimal drawdown potential. Once you create clear rules that work for you, it's going to help you understand why you are taking that trade. Our goal as traders is to be confident in the positions that we're taking. And it is in our best interest to define these specific rules because ultimately we need to trade in the same direction as the professionals and other market participants that have the power and influence to move the market. And more isn't always better. If you find yourself needing 100 different criteria to be met before you can even take your position, it is very unlikely that you are ever going to find that setup happen. It's best to practice with anywhere from 3 to 5 confirmations. And as time goes on, if you find yourself questioning any of your confirmations, see if there's anything else that you can learn about it. See if you don't fully understand why you're using that in your strategy, or go ahead and swap that out for a different confirmation, but follow the process. Trust and believe in yourself. And the more that you know about the specific markets that you're trading, the more confidence you're going to have when entering the market after you've identified the trade. Be sure to leverage the resources made available to you, and the most important thing is to stay plugged in. As you implement the information, ask questions and remain open minded, because all trading requires is persistence, discipline, and acceptance that you can and will learn this skill set.